You're under a lot of debt and someone told you that you need a consumer proposal, but no one explained what that actually means. By the end of this video, you'll understand what a consumer proposal actually is, how it compares to bankruptcy, and whether it's the right choice for you. I went through this process myself here in Alberta, and that's why I'm sharing what I learned. Let's begin. A consumer proposal is a formal, legally binding process where you offer your creditors a deal. Pay back a portion of what you owe over a longer period, interest-free. It's not something a debt consultant or a company can do for you. Only a licensed insolvency trustee, or LIT, is legally allowed to file a consumer proposal on your behalf. So how is this different from bankruptcy? Two big differences. First, in a consumer proposal, you generally keep your assets, your house, your car, your savings. In bankruptcy, assets above certain limits can be surrendered to the trustee. Second, your payment amount is fixed the day it's approved. In bankruptcy, if your income rises, you may owe surplus income payments on top. A consumer proposal locks in your number no matter what happens to your income later. Let's walk through exactly what happens once you decide to file. The moment your proposal is filed, something called a stay of proceedings kicks in. Legally, your creditors have to stop calling, stop collection action, and stop any wage garnishment right away. That protection starts immediately. You don't have to wait for creditors to approve the proposal before the harassment stops. It kicks in the day your trustee files, giving you breathing room while the rest of the process plays out. Your trustee submits the proposal to your creditors, and they have 45 days to accept or reject it. An important thing to remember is that the proposal passes if creditors representing 50% plus $1 of your total debt vote yes. It's not about how many companies you owe to. It's about dollar value. So even if a few smaller creditors object, the proposal can still pass if your largest creditors are on board. Here's what that looks like in real numbers. Say you owe $20,000 total. $10,001 of that is a personal loan, and the remaining $9,999 is split across 5 different credit cards. If all 5 credit card companies vote no, the proposal still passes if that one personal loan alone votes yes, just because they hold just over 50% of your total debt. One creditor holding the majority dollar value can outweigh 5 creditors who disagree. Once approved, the proposal is binding on all your unsecured creditors, even the ones who voted against it. From there, you make one fixed monthly payment to your trustee, who distributes it to your creditors. The maximum length allowed in a proposal is 5 years, though many people finish sooner. A consumer proposal covers most unsecured debts: credit cards, lines of credit, payday loans, tax debt owed to the CRA, and in some cases, student loans. As of today, this option is available if your total unsecured debt is under $250,000, not counting your mortgage. Now, the part everyone worries about, your credit. Filing gives you an R7 rating on your credit report. Though that is not a good look for your credit, that's not as severe as the R9 rating bankruptcy gives you, because R7 signals a formal repayment arrangement, not a full default. That R7 stays on your report for 3 years after you finish paying it off, or 6 years from the date you filed, whichever comes first. So the faster you pay it off, the sooner it disappears. So who is a consumer proposal for? Generally, people with steady income who simply can't keep up with their full monthly debt payments, but who don't want to lose assets or go through full bankruptcy. It's also worth being honest about who this isn't the right fit for. If your debt is relatively small, or your income isn't steady enough to commit to a fixed monthly payment, a consumer proposal may not be your best option. So to recap, a consumer proposal locks in a fixed payment, lets you keep your assets, gives you a less severe R7 rating instead of bankruptcy's R9, and once approved, it's binding on every unsecured creditor, even the ones who said no. If you're still not sure whether this actually fits your situation, I built a free 15-question readiness audit. Links in the description, and it takes about 5 minutes to take. The audit will determine if you're ready and legally eligible for a consumer proposal. That's the foundation, and this is it for now. Next week, I'll break down exactly how a consumer proposal compares to bankruptcy when it comes to your actual monthly payment using real numbers. Don't forget to subscribe and leave a comment if you have questions. Thanks.